Welcome back, and joining me with more insights on the day's trade is Roy Mutooni from Sanlam Investments. Roy, thanks so much for your time today. And let's start off with the hot topic of the day. Everyone's been waiting for Fed Chair Chair Powell to deliver his address at the Jackson Hole Economic Symposium. Throughout the day, I've heard a lot of opinions on what could be said and what could not be said. Where are you at? Do you expect Fed Chair Powell to perhaps speak on the trajectory of rate cuts, tariffs maybe, and the impact that'll have on inflation, as well as maybe the independence of the Fed, which has also been, something that's been a hot topic over the past few months?
No, I don't think so. Remember, this is supposed to generally be an academic treatise. So almost a meeting of academics talking about some of the arcane stuff they do. And then usually, because this is the keynote speech, he could offer some guidance on the next call. Like last year, it also comes at a critical time. So last year, he guided towards that significant cut. This year he's got a difficult position. I mean, purely from a fundamental perspective, employment's going the wrong direction, inflation's going the wrong direction, wages are still strong. And there's the political influence and there's the pressure on some of his board members as well. So he's got to be very careful because whichever way he picks, he's going to have a lot of noise that argues against him. And I think they also need one more data point to absolutely firm up on what's happening. The thing is, I think when you put everything together, he wouldn't be hurt by cutting rates by 25 basis points and then watching, or pointing towards a softening in terms of appeal. But the thing is, remember, that could also put him on a back foot if he becomes too dovish, because that might imply that he's folding to pressure. So every word will be watched, every word will be interpreted. And let's see, the markets are actually quite poised for that. You've seen the probability of a cut going down significantly and wavering around that 50-60% level. It just tells you even the market doesn't know. So the stage is set.
Listen, I'd hate to be Jerome Powell at this moment. Hey, really, really tough job there, tough task. Let's take a look at some company news out today. We had results from gold player Gold Fields. The group, of course, benefiting from that glittering gold price, posting 24% increase in production. HEPS also more than tripled. I think the payout doubled as well. These kind of numbers from these gold players are expected, right? I mean, the last 6 months, the comparable period, we did see Goldfield take a hit on the back of the one-off costs, but we are now seeing, results somewhat normalizing.
So the thing about this is what typically happens when commodity prices run like this, costs also run. But what you've seen that's useful and unique in this result is production rose, costs were largely held in check, and the margins were actually significantly wider on that higher commodity price. So I think it's a good thing. So I mean, it just goes to show you there's a point in time when you get into these commodity stocks, into these cyclical stocks, because when they're shining, the leverage to the commodity price is incredibly high, and you get that benefit, and that's what I think investors are seeing now.
And then over on to logistics player Grinrod, that group, right? The results were, I'd like to believe that they were okay because they did sort of get a boost from some of the transactions that were finalized during the period. But when you look at the top line, it's down, what, 4%? What have you made of those numbers?
So I think with Grinrod, you have to separate core from non-core, because there's some assets which they've identified they're going to sell, dispose, close down, and are not part of their ongoing operations. And there's the core logistics and freight business. Now, the thing about it is, at the end of the first quarter, it looked like volumes were coming down because that was the commodity cycle and everything. But then what you've seen in the second quarter is that there's an acceleration of volumes through their ports, through the Matola port and through their ports in South Africa as well. So I think the way to read it isn't the spot where the revenue's down. It's that there's an acceleration that's
volumes
coming through, and they're well positioned to take advantage of that
Aha.
into their second half. So I think a solid result. I
Okay.
think nicely and well positioned to benefit in the second half from rising volumes.
And I guess also the what is this? The recovery in Mozambique also boding well as
Yes.
those conflicts have subsided.
Absolutely.
All right, let's move over to Aspen. They expect to post a loss per share. This, of course, comes as it starts accounting for some impairments. I mean, the group hasn't fared well over the past, year or so? I think the share price has even halved. It's like from 200 to about
That's right.
100 right now.
So I think this is the lesson that investors learn when stocks go from high expectations to disappointing on low expectations. So Aspen was high flying, and throughout all the healthcare things that we've seen in the past few years, they always had like a finger or a toe dipped into it, whether it was the COVID vaccines or vaccines into Africa, and then now the GLP-1s. But the execution hasn't been that good. So they weren't, though the result wasn't all bad. I think it's just that expectations are high, and when you disappoint on that, it hits your it definitely hits your share price.
Okay.
So the impairments, yes, those will come through, but the combination of the stronger currency, lower volumes, contracts cancelled, all of that just come together to show that investors need to reassess their appraisal of the valuation of the business, and that's come down dramatically, like you said.
Yeah.
I think the management team here is in the show me phase. I think people will only actually give them credit when they see actual delivery of use of contracts and use of that spare capacity which they have. The number of disappointments have probably become too much.
All right, let's get your stock pick before I let you go, Roy.
My stock pick is Astral, and again, very similar to what I said with Goldfields. Cyclical stocks, when they're flying, they completely fly. So Astral, we saw it suffer from load shedding, avian flu, you name it. Now at this point in time, the cost of feeding those chicken is low. The price of selling chicken domestically is rising. And they'll be able to clean out their balance sheet, and you can see this momentum going through over the next year or so. So I think it's a massive opportunity. This is the one time the chicken stocks are in the sun, and investors should take advantage of that and see the share price rise.
All right, let's leave it there, Roy. Thanks so much for your time and sharing your insights with us today. That was Roy Mutooni from Sanlam Investments.